I'm Haley Beath with your weekly market commentary on this Monday, August 26, 2019. Ag markets rallied as President Trump and officials in China recently agreed for trade talks to resume, signaling a potential de-escalation in trade tensions. The increasingly bitter trade war escalated on Friday, with both sides adding more tariffs on each other's exports. Corn and soybean crop conditions increased as expected, with corn up 1% to 57% good to excellent. Soybean conditions increased 2% to 55%. Corn denting improved in nearly every state surveyed, jumping to 27%, but still behind the 46% 5-year average. Soybean pod setting averaged at 79%, far behind the 91% 5-year average. The worst delays for pod setting are seen in Indiana, Michigan, and Missouri. The Pro-Farmer Midwest Crop Tour estimated corn and soybean yields below the USDA's estimates. The tour reported that soybean pod counts are down from last year, but the crop is still blooming. The soybean crop can catch up if we see favorable weather in the next month. While corn estimates were down, corn yield predictions weren't drastically different from the USDA's, so there's little concern there. The ag market surprisingly did not react much to the recent crop data. Customs data showed that China's July soybean imports from the U.S. jumped threefold from the previous year, coming in at over 900,000 tons. Chinese state firms resumed some buying following a bilateral truce back in December, but tensions between the two countries escalated again in recent weeks. The U.S. has exported a very small volume of soybeans to China since the trade war began, which may have contributed to the recent import value being relatively higher. That's your weekly market commentary. Follow back up with us on Monday for next week's opening market analysis. Have a great start to your week. If you haven't downloaded our mobile app, go to your App Store or Google Play and search for the Tyson LGS mobile app, where you can sell and manage your grain anytime, anywhere.